Hello, everyone. Good morning, ladies and gentlemen. Okay, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to another promising edition on the Extra Speed Live as we will be taking another fresh new look at the financial markets after enjoying a tremendously profitable last week. Well, before we kickstart the session today, I would like us to run through our daily routine just to confirm that we are all on the same page. So, if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So, your highs will give me a positive feedback that we are good to go and we are right on the same page. And thank you very much as I look forward to your feedbacks. Okay, so let's see what we have here in the comment section. So I can see Lover, good morning to you. V1313, good morning. Leziel, good morning to you too. I can see Maxim74, Borgiono, hello Carrie, good morning. I see you too. Trecia, good morning. Trust you're doing very well. Thank you very, very much. All right, so I think with this handful of feedbacks, I will take this as a confirmation that we are all good to go this morning. And it's on this note, I welcome you all to yet another promising edition on the Extra Speed Live, your daily dose of financial insights and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be delving into the financial landscape, looking out for technical patterns and structures that we can use to guide our trading decisions for this week. Well, today being the first trading day of the week, this is the most appropriate time you have. If you have any assets you want us to look at for this week, this is the most suitable time for you to drop them in the comment section, and trust me, I will try to incorporate them into our plans for this week. Well, with that being said, I also have some handful of financial instruments that I've prepared for us for this week. In fact, I have like 5 of them on my watch list, but let's see how many we can take today as we monitor price action from this moment. For those of you who are joining us for today for the first time, you're highly welcome on board, and I do understand that you may be wondering what this is all about and what is it that we really do here. Well, as technical traders, we usually gather here on a daily basis as a community to engage in follow-ups and reviews of our trading positions in preparation of the New York session. The session kickstarts 10 a.m. UTC, 11 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So for this week, I want to be looking at the USOILSPOT, the USTech100, which is popularly known as NASDAQ. I also have the GBPUSD, the XAUUSD, my favorite asset. And if we have enough time, we can also take on the USD JPY. So with that being said here, we shall be diving right into the business. But before we go into our daily routine, it's important to also emphasize that this week is laced with some impactful event that we definitely want to be looking forward to. And we would want to focus on especially the US inflation data, where we are looking forward to the CPI and the PPI data for this week. And of course, we also have For the oil prices, we also had of the China's economic growth. We are going to be looking at that today and see how we can strategically position ourselves for the next move using these informations. And then in the stock market, we also have the closing out a turbulent week with artificial intelligence and NVIDIA going into a reverse after a recent rally, which of course is going to be affecting the S&P, which lost about 0.26% due to the fall of this. And Nasdaq generally fell about 1.17%, which at this moment we are considering it to be some profit-taking activity. So we are going to be looking at those charts too as well and taking all of these fundamentals into consideration while we try to make an informed decisions. Then we're also going to be looking forward to some UK job data which will be released later in the week to give us an insight into how healthy the labor sector is. So with that being said, let's run through the economic calendar. Let's keep tabs with the fundamental factors that are likely going to be influencing the market sentiments today. And for those of you who have been with me for a while, you know how important this exercise is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after these economic events. Now, based on the asset we are looking at for this week, we will be focusing on economic features from the United States and the United Kingdom. And for today, Monday, March 11th, we do not have any high impactful event, and in fact when I included the mid-tier economic features, we still do not have anything to look out for. So what this simply means is that we will be relying on our technical skills to understand the behavioral patterns of market participants, and of course use the information gathered from the historical data on the chart to identifying trading opportunities today. And while we are also looking out for trading opportunities, we will not ignore the potential that the anticipation of the high impactful event coming up tomorrow, that is the consumer price index, the ILO unemployment rates, claimant count rate, and employment change will one way or the other influence the way market participants will behave today. So we are going to be taking this into consideration as we may likely see extended sideways trading activities. So with that being said here, let's dive right into the business. And as usual, the first asset we will be taking today is going to be the US All Spot. And on the US All Spot last week, we did very well on this asset as we capitalized on the bearish momentum that started on the last trading day after enjoying a week of choppy market conditions, though we had roller coasters of buys and sells before we finally saw selling opportunities at the end of last week. However, before we go into the technical expectations in this market, we need to also take into consideration the fundamental factors that has been influencing the way market participant behaves in this environment. And of course, since last week, we saw how oil prices continued their decline for the third consecutive session, especially during the Asian session this morning. And I'm of the opinion that this further decline is driven by reports of reduced oil imports in China. And if considering the fact that China is the largest importer of oil, we know that the Chinese demand usually has a major impact in the market dynamics of the oil market. Now, import figures showed us a decrease of around 5.7%. That's to the tune of 10.8 million barrels per day in the first 2 months of this year 2024 compared to December's 11.44 million barrels per day. Additionally, the market is going to be exercising caution, is expected, let me use that word, to exercise caution ahead of the release of the consumer price index data from the United States, which is scheduled for tomorrow. And investors will also be keeping a close eye on the retail sales data and producer price index coming in on Thursday, which could also offer fresh insight into the U.S. economic situations amidst growing expectations of a Federal Reserve interest rate cut in the month of June. So these are the things that we will be looking out for and see how it's going to be influencing the market sentiment. So in that regard, let's run through the higher time frame. So there's nothing really different from what we have been seeing on the daily time frame. So what I did today was to incorporate the 4 hours time frame instead, and while doing that, what I did here was to take into consideration the nature of price action since the beginning of the month of February. And if you do this correctly, you will see that since the month of February began, price action had consistently found higher lows, giving us this ascending trend line, buttressing the strength of the buyers in this market. And as you will see, the last 4-5 weeks has seen price action respect this ascending trend line, and not until last week's trading session we saw an interesting development where the ascending trend line was broken to the downside. And usually when price breaks down our ascending trend line, it's a clear sign that some sellers may likely be coming in. Now, the question to ask as we head into the new week is whether or not this breakdown could turn out to be a false one or a valid breakdown. So it's very important for us to see how the market will react following the breakdown of the structure. Now, if we look at things from a technical and theoretical standpoint, whenever price breaks down an ascending trend line like this, we expect that price may come back, retest the structure that was broken in an attempt to continue the downtrend continuation. Now, will that be the case today? Well, we don't know yet unless we try to have a key level that we will be using to guide our trading decisions. And after considering the last 4 or 5 weeks in this market, I was able to spot the $77.50 area, which of course had played a major role in determining the direction of price action in the last 3-4 weeks. Now, if you look at this area, you can see we saw how this area was more of a selling niche during the month of February, and during the later part of February it was more of a choppy market conditions around this area as market participants were very indecisive at that point. And not until the breakout of the structure happened during the last couple of days of the month of February, and since the month of March has begun, price action had maintained positive traction above the $77.50 area. And of course, this is a clear sign that buyers are finding it easier to negate all attempt by the sellers to break through the structure. Though we had a breakdown here, but as you see now, price action is back above the structure. Now, will this be a platform that will incite the next wave of bullish momentum, or are we just going to see selling pressure persist in such a way that it drops back below this area? Now, for us to have an idea into how market participants will be reacting to the structure this week, we will be scaling down into the 1 hour time frame. Now, scaling down into the 1 hour time frame, it will give us a clear view into how the market participants have been reacting to this current structure. And it's quite interesting. I already have a buy position triggered after identifying a simple setup, which I will be explaining to you in a moment. As you will see, last week we saw how price closed around the $77.50 level, which happens to be our key level for this week. And you know how we use our key levels in this community. As long as price remains above the key level, we obviously want to be looking out for patterns and structures that support the idea of buying and we will not be considering selling unless we see a bearish setup below the key level. So the week started around that key level, dropped into the $76.80 level, as you will see here, where we saw the emergence of buy pressure pushing price back to the upside. So in the for the first 8 hours of the new week, we saw how price action was confined within the $77.40 level and the $76.80 area to emphasize the prevailing uncertainty that started this week. And of course, from a technical standpoint, you know how we treat our range-bound trading structures whenever we identify them. Due to the indecisive nature, we exercise patience, waiting for market participants to make a decision, which obviously will come in the form of either a breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. So with orders placed at both ends, we finally saw price break out of the resistance line of the range, and of course the key level had the $77.50 area. And as it is right now, I currently have about 50 pips for the first buy position and about 45 pips on the second buy position, running into close to 100 pips. And for those of you out based on the knowledge you have gathered in this community, if you had identified this trading setup, well, that's wonderful. Well done to you. And if you had capitalized on that opportunity, I would advise you to move all stop losses right now. Let's secure this current buy position as we keep all our options open. Now, with a well-secured position at this juncture, what is going to be our plans for today? Are we going to continue buying this asset, or are there chances that sellers could come in? And for the case of those who had missed out on this opportunity, what are the things you want to be looking out for? Now, as it is right now, price action just broke out of that key level and the resistance line for this week, which supports a bullish idea right now. As long as price remains above the structure, we shall maintain a bullish bias. But since price has broken out of the structure, it's still expected that we may see a situation where price may come back to retest the structure in an attempt to continue the uptrend. Now, if that is going to be the case, we can still have a buy limit order around the zone to capitalize on that opportunity. And if price continues to find new highs, we have another structure along that psychological level, that is the $78 area, to add more buy position if ever price action breaks out and retests that particular level. So this is my view here as regards buying the US All Spot. Let's see if a reversal setup will continue at least for the first half of this week. Now, in as much as we maintain a bullish bias at this juncture, we cannot ignore the potentials that sellers can also come in. Remember, during the second half of last week, it has been more of selling the US All Spot following the crude oil stockpile, which came in below expectations. And now, if this bearish momentum will continue, what are the conditions that will make us feel comfortable selling this asset? Well, if price action drops and takes us out of all the buy positions we have right now, I will be willing to sell if price breaks down the support line of that range at the $76.80 area before joining any bearish move to the downside. So that will be the only condition for me to sell, as a breakdown of the $76.80 level would have taken out the lowest point price action has been for this week to incite a bearish signal. So I would encourage us all to mark out these levels and structures on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 seconds, or let's 15 seconds off, to see if there are any questions before we move on to the next asset on our watch list. And you can use that time to mark out these levels, as you will be needing them as a reference point to guide your independent trading decisions. So I'll be seeing you in about 10-15 seconds from now. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at today is the USTech100, popularly known as the NASDAQ. And we had a tremendously profitable week during our previous analysis for last week, where we had roller coasters of buys, sells, and buys. And during the later part of last week, we took advantage of that strong bearish move following the NFP data, which came in beyond expectation but lower than the previous month. And so far, I want to consider this as a profit-taking activity. Remember, prices are at an all-time high, and usually when price gets to an all-time high like this, it takes some time before price acclimatizes to the zone. And for those who had joined the bullish momentum, maybe since the beginning of the year or later than that, or earlier than that, will out of fear want to be taking some profit off the chart, which usually reflects on the chart as retracement move, consolidation phases, or choppy market conditions. So we are going to be taking all of this into consideration and see how far will this bearish momentum go before the next wave of bullish momentum will happen. And Nifty on Friday ended down more than 5% in its worst one-day performance since late May, and shares in the company still ended the week with gains over 6% amidst a rally that has added more than $1 trillion to its market cap so far this year. So at this point, are we seeing price drop further to the downside, or are we likely going to continue the uptrend? Now, to understand the current market dynamics, we shall be scaling up into the higher time frame. And for those of you who have been with me for a while now, you will be familiar with this current structure. So as we did last week, we took into consideration the nature of price action since the month of October of last year. That's about I think about 6-7 months of historical data, and what we came up with was quite obvious. Price action has been bullish. As you will see, price action had consistently found higher highs and higher lows, giving us this beautiful ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying. And as it is right now, there is no point in time price action has broken down this ascending trend line, which keeps the options of buying open. However, if we look at what has been going on here since the month of March began, let me zoom in. You will see that the last let's see how many days now, 1 2 3 4 5 6 7 8 9 10 days, price action has been confined within a range. The all-time high at the 18,410 level and the 17,950 area, which was finally broken a couple of weeks ago. Now, to guide our decisions for this week, we have our key level situated at the 17,950. Look at how that level had played a major role in determining the direction of price action since the beginning of the month of February. Look at what happened here in the month of February. It was more of a selling niche, as every attempt by the buyers to break through was met with strong resistance from the sellers, as you will see here. And not until the beginning of this month we saw the breakout of the structure. And if you remember vividly, during our live session on Monday last week, we said here that we may likely see price retrace back to retest structure in an attempt to continue the uptrend move. And throughout last week, we saw how it has been difficult for sellers to break through this area, that is a 17,950, giving us a sign that this level or this zone may have a strong memory for buying power. And one interesting thing about the key level here is how beautifully it shares a confluence with that ascending trend line. Now, if price remains and continue to find buying pressure above this beautiful confluence, we will continue to look out for patterns and structures that support the idea of buying. And if price breaks down the structure, the 17,950, price would also have broken down the ascending trend line for the first time in 6 to 7 months to signal a sell-off in this market. So you can see that we are at a crucial juncture in this market where, depending on how market participant reacts to this key level and the ascending trend line, will determine if we are going to be buying or selling this asset this week. So to have a better perspective into this, we would like to scale down into the 1 hour time frame to see how market participants have been reacting to this key level since the new week began. Now, when we scale down into the 1 hour time frame, we'll see things more clearly. So right here on the 1 hour time frame, what I did here was to take into consideration what has been going on since the week began. So in the last, let's see, 1 2 3 4 5 6 7 8 9 10 11 12 13 hours, price action has been confined within the $18,040 level and our key level around the 17,960 / 17,950 zone, to emphasize the prevailing uncertainty in the market at this point. Now, you know how we do it in this community. We have a range-bound trading structure which emphasizes the indecision in the market. We would exercise patience and wait for a signal for market participants to make a decision, which will come in the form of either the breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. Now, in addition to this range, remember, price action still trading above our key level at the 17,950, which opens up the idea of buying these assets. So with a buy stop order sitting above the $18,040 area, we intend to capitalize on the uptrend move. That is, a breakout of the 18,040 will trigger a buy stop order from here, and a retest of structure will further emphasize the strength of the buyers at this point. So this range bound structure we have here could either transition into a reversal pattern or a downtrend continuation. Now, if price breaks down the 17,950, I would like to see a retest of structure before jumping into a sell position. And the reason why I will need a retest of structure on my lower time frame is simply because of how this area has been considered to be a strong memory for buying power. I showed you that on the daily time frame, as you will see how sellers have been struggling around that area in the last 1 month. So if we really want to sell, we need to see a confirmation happen here that truly states that sellers are here to stay. So what we will be looking out to sell is a breakdown, retest of structure, then we can join the bearish move to the downside. So it's a simple trading setup we are having on the USTech100 today. So our center of focus is basically going to be between the $18,040 level and the 17,950, where depending on the direction of the breakout will give us an idea of where price will be going, at least for the first half of this week. Now, if the bullish momentum continues, which I have a strong feeling that price may want to continue to the upside, I'm of the opinion that we have some more opportunities to maximize the potential of that bullish move. So I will be adding one more level at the 18,135 level. So I encourage you to mark this out on your chart, as you will be needing it to maximize the potential of this bullish move if price action ever breaks out of the structure. And the reason why I'm including this level is due to how price has reacted to this level in the past. Look at what happened here last week Thursday. We saw buying niche here, and in fact this also built some bullish momentum from this area before it was broken here last week Friday. We saw selling pressure here. Now, if price can break back above the structure, then I'm of the opinion that we are back within the buyer's territory. So I encourage us all to mark out these levels accordingly on your chart. And if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I hope we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD. And remember, for those of you who are with us throughout last week, remember we were buying this asset throughout last week, and I did emphasize that we will not be considering selling at all, even if any bearish momentum comes in, as we will consider that momentum as a retracement of that bullish move. And of course, we did enjoy multiple buy entries on this asset, and once again, congratulations to everyone who capitalized on this bullish momentum. So the new week has begun, and the way I'm looking at things right now, it appears market participants are bracing themselves for the highly anticipated US CPI report, which is scheduled to be released tomorrow, Tuesday. And in light of the current market condition, the US dollar appears to have altered its losing streak, while the GBPUSD pair remains on a positive trajectory to push to new highs. So we may, due to this anticipation of the event we are looking at for this week, we are likely to see trading activities remain within a range today, maybe. And on the other hand, the GBPUSD pair remains upbeat as market expect the Federal Reserve to lower interest rates before the Bank of England does. Now, given this recent development, how do we intend to navigate the current market structure using the information we gather from both the fundamentals and the technical aspect of this market? Now, to understand the current market structure, our first point of contact will be the daily time frame, where we will be taking into consideration the nature of price action since the month of June of last year. And if we do that, the first thing I was able to spot on this chart is that key level at the 1.2800 area. As you will see, this level had played a significant role in determining the direction of price action. Now look at what happened here in the month of June. We saw how this area was a strong selling niche. As you will see here, every attempt by buyers to break through was met with strong resistance from the seller. And at some point in the month of July, we finally saw price break out of that structure as buyers gained some traction. Then a month later, we saw price drop back below the 1.2800 area. And in fact, since the month of August of last year, we saw our price had remained subdued below the 1.2800 area to emphasize the strength of the sellers around this area. So you can see that every attempt by buyers to break out was negated at every point in time that price comes into that area. And not until last week's trading session, we finally saw price break out of that level to close at a new high at the 2.9 area for the first time in about 7 months. Now, going into the new week, the question at this juncture is, the breakout we witnessed on Friday, will it turn out to be a true breakout, or is it going to turn out to be a false breakout where selling pressure may persist again, pushing price under the 1.28 area? Now, despite the fact that the market has been bearish since last year, July, which is evident with this bearish trend line you see here after connecting the series of lower highs, something interesting happened in the month of October. As you will see, the bearish momentum did not continue anymore as price consistently found higher lows at that point, giving us an ascending trend line to work with. And of course, this trend line here has supported the bullish trend leading to the breakout of that descending trend line we have here. So we saw the breakout of the descending trend line happen here at the beginning of last week's trading session. Now, from a technical standpoint, when price breaks out of a trend line, especially this descending trend line as we see here, we expect that some point in time price may likely come back to retest the trend line that was broken, which beautifully shares a confluence with that ascending trend line to incite an uptrend continuation. Now, is that going to be the case for this week? Are we going to see price drop into that area to incite another wave of bullish momentum, or will it drop to break down, retest the structure to incite a sell-off here? Or are we going to see a situation where price will just continue the momentum right above the 1.288800 level to incite more uptrend scenario? So to answer this question, I was able to identify a simple trading setup on the 4 hours time frame, which we will be using to manage the market dynamics on the GBP USD. Now, scaling down into the 4 hours time frame, what I did here was to take into consideration the nature of price action since the beginning of the month of February. And if you do that correctly, you will see that the market has been bullish, as you will see our price action transitioned into an ascending channel. So if we connect the series of higher highs here, we have the resistant line of the ascending channel. And when we connect the series of higher lows, we have the support line of the ascending channel. Now, something interesting happened during the course of last week. We saw how price action broke out of that resistant line of the ascending channel, as you will see here, which beautifully lines up with that key level at the 1.2800 area. Now, since the breakout of the structure happened, we've seen selling pressure resume, which could be a result of profit-taking activities, retracing maybe back into the structure in an attempt to continue the uptrend. Or are we going to see a scenario where the support line of the range will be a target for sellers, dovetailing to about 120 pips minimum to catch here, or even more if price drops further to the downside? Now, to guide our trading decisions for today, we need to understand the behavioral patterns of market participants since the new week has begun. And if we scale down into the 1 hour time frame, you will see, hold on a second, you will see that since the new week began, we saw our price action remained confined within the range of the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in the market. And you know what I told you earlier, I said we may expect an extended sideways trading activity due to the anticipation of the US CPI data coming up tomorrow. And we also have some other inflationary data like the PPI data, retail sales data coming up later in the week. And we also have the data from the labor sector in the United Kingdom, all of which will be playing a major role in bringing some impetus into this market. Now, with the situation we have here, we would rely on this technical structure to guide our trading decision, at least for the meantime, while we wait for these events to happen. So you know how we use our ranges whenever we identify them on the chart. We wait patiently for price action to either break out of the resistant line of the range to give us an opportunity to buy and join the uptrend continuation, or the breakdown of the support line of the range to give us an opportunity to sell, maybe joining that profit-taking activity going forward. Now, in as much as price action has triggered my wholesale position right here at the breakdown of the 1.28450 area, we still need to be wary of the uptrend continuation on this chart. Now, the reason why we're still going to keep the options of buying open is simply because of two factors here on this chart. The first one is the fact that price has broken out of the resistant line of that ascending channel we identified on the 4 hours time frame, as you will see here, and we may likely be seeing price action be doing a retracement to retest the structure in an attempt to continue the uptrend move. Or if price action breaks down the ascending trend line, then we may be looking at our key level at the 1.28 area as an area to look out for new buying opportunities if a reversal pattern evolves around that area. So what this simply means is that at this point, this bearish opportunity here is going to be considered a temporary one, as we will try to be on standby to move all stop losses accordingly as soon as price moves significantly in our favor. So for those of us who capitalize on this bearish opportunity, we shall be moving our stop losses accordingly, especially if price gets close to this trend line. Move stop losses, secure the current sell position, and wait patiently to see how the market will react to this ascending trend line. If a double bottom structure happens around that area or any form of reversal pattern occurs, we will be buying breakout of the neckline to join the uptrend move, when we will be adding more buy position at the breakout of the 1.28650 level. But if price drops below this ascending trend line, then we could be looking out for more selling opportunities to hard, and then let's see how the market will react to the 1.280 area, where depending on what happens there also will determine if we are going to be joining the uptrend continuation from there or add more sell positions to our existing trade. So to join a sell at the breakdown of this ascending trend line, let's look at somewhere around the 1.28250. I think that will be more precise to join. Hold on a second. Yes, 1.28250. So I would like to label this area. So if a breakdown retest of the structure happens, we'll definitely be adding more sell positions to our existing trade. So let's mark this level out and then look out for more selling opportunity if ever price action breaks down that structure. So this is how we are going to be managing a bearish momentum on these assets. And if the contrary happens here, that is, price does not drop further to the downside and instead continues to find new highs, then a buy stop order above the 1.28650 will trigger a buy position for us if price breaks out of that area, and then we look out for more opportunities to maximize the bullish move at the breakout of the 1.28900 level. So this is my simple view on the GBPUSD for today. So I encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the setup, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off to see if there are any questions, while you can use that time to mark out these levels accordingly on your charts. So I can see a bunch of comments here from BimBim140. Assalamu alaikum to you too. Where is Adar? Good morning. Glad to have you around. Prince445. Oh, you're new here, Prince. Good morning. I'm very excited to have you around with us this morning. I hope you're getting some couple of things so far. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually makes you to be able to make your own independent trading decision based on the information you gather here. So I look forward to seeing more of you, Prince445, and glad to have you around with us today. Mino123, good morning to you too. Glad to have you around with us. I see you, Modak. Pizza Trend, how are you guys doing today? So in the absence of no further questions, I'm of the opinion that we are all on the same page, and in that regard, let's dive right into the final assets on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we had. Last week we were able to scoop in over 1,200 pips in profit on this asset as we kept on adding and buying more position throughout the course of the week. And we saw last week our price action. It's an all-time high at the 2,195 area, and as the new week kicks off, gold prices is showing some oscillation within a narrow range during the Asian session today, and I'm of the opinion that it may be consolidating its recent gains in this market. Now, as it is, the upward trend seems to take a pause as it is right now, as the US dollar's downtrend also stalls too as well. And this may likely be as a result of market participants eagerly awaiting the high impact CPI data from the United States for potential market direction. And last week, the notable spike in the US unemployment rate to a 2-year high in February has also bolstered expectations of interest rate cuts anytime soon by the Federal Reserve. And in fact, majority are proposing May or June, to be precise, for this event to happen. Now, this has kept the US Treasury bond yields low, hindering the US dollar's potential for recovery and providing support for gold, which typically thrives in such market conditions. And of course, we know how the US Treasury bond yield is directly proportional to the US dollar. So if the US Treasury bond yield is not doing well, definitely it would reflect on the dollar, and this is what we are witnessing so far. However, if we look at this from a technical standpoint, there is an evident reluctancy among market participants to make any fresh commitment to gold amidst a heavily overbought conditions on the higher time frame, especially when we are looking forward to the US consumer inflation figures. Now, let's look at this from a technical standpoint, starting from the daily time frame, so we can have a better understanding into what the market is doing. Now, on the daily time frame, which is going to be our first point of contact, for those of you who have been with me for a while, you will be familiar with the structure, as you will see after taking into consideration the character of price action since the month of July of last year. You will see that the market has been strongly bullish. And to emphasize the bullish momentum here, you will see that price appear to have transitioned into what is looking like an ascending channel. So if we connect the series of higher highs, we have the resistant line of this ascending channel, And when we connect the series of higher lows here, we have the support line of the ascending channel. Now, in addition to the ascending channel are a couple of levels. Remember, during our last week's analysis, the $2,080 area was serving as our key level for the week. And you know how we use our key levels. When price remains above the structure, we look out for patterns and structures that support the idea of buying this asset. And this gave us the privilege of capitalizing on this bullish move all the way into the all-time high at the 2,195 zone. Now, as it is going into the new week, we have a new level which will be serving as our key area, which is the $2,143.50 level. Now, why have I chosen this level as our key level for this week? Well, it's simple. If we go back to the beginning of the month of December of last year, we saw how this area became a strong selling niche, negating all the attempt by buyers to break out of that structure, as we saw that sharp rejection of that level during that time. Now, last week, we finally saw price break out of the structure, as you will see here, giving us a signal into how strong the buyers are. So due to this level here and the breakout, I'm going to be using it as a yardstick to guide our trading decisions for this week. Now, the question going forward is the breakout we witness here, is it going to be turning out to be a true breakout or a false one? So if it's going to be a true breakout, definitely we want to see continued buy pressure above the key level to continue the momentum to the upside. And if it's going to turn out to be a false one, then we may likely see some reversal patterns around this area, inciting the breakdown of that key level to incite more selling opportunities, maybe back into the 2080 or even the support line of the ascending channel. And if we look at that, we are looking at a minimum of 1,300 pips to catch there. And one thing I would also like to buttress here is the psychological expectations whenever price action finds an all-time high. You all know that price is at an all-time high. This is a never seen level that gold has hitting last week, and whenever this kind of situation happens, we usually see the emotions of fear come into play, where those who had capitalized on the bullish momentum, join the momentum all the way to this level, may out of fear want to start closing in some of their positions just to take in some profit of the chart. And this usually reflects on the chart as retracement move, consolidation phases, or choppy market condition, which is very likely to happen here, as we are at an overbought area at this point. Now, to guide our decisions for this week, I went further into the 4 hours time frame to identify a simple trading setup around that structure. And if you look at this, I think it's still the same with what we saw on the daily time frame. So let's scale down into the 1 hour time frame to see how market participants had reacted to the structure since the week began. Now, the first thing I did here on the 1 hour time frame was to capture this series of higher lows here since the beginning of the month of March. And if you do that correctly, you will see a beautiful ascending trend line, which we will be using to guide our trading decisions going forward. Now, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will look out for patterns and structures that support the idea of buying, and we are not going to be selling unless this ascending trend line is broken to the downside. Now, in addition to the ascending trend line, you will see that price action is currently caught within a range since the new week has begun. You will see we have price confined within a $2,189.50 level and the $2,177 area to emphasize the prevailing indecision going on in the market at this point. And whenever we have a pattern like this, all we want to be doing is exercise patience, waiting for a signal to come in the form of either a breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, looking closer at the structure, you will see that in the last 1, 2, 3, 4 hours, our price action appeared to have broken and oscillating around this ascending trend line. So is this going to turn out to be the beginning of the retracement of the impulsive move we have been enjoying on the gold, or is this going to turn out to be a false one? Well, I would like to see, since we already have price breakdown and retest the trend line, I want to be looking at selling opportunities below the $2,177 area to join a bearish move, as if price breaks down the 2,177, price also have broken down the ascending trend line to inside selling opportunities. So we will be looking at a minimum of about 340 pips, that is at the $2,143.50 level, and if this level gets broken to the downside, we will be looking at more opportunities to sell this asset. That is what we will be looking out for to sell. So let's capitalize on that opportunity if it presents itself. However, in as much as we're looking out for selling opportunities, we cannot ignore the potentials that buyers could still continue the momentum to the upside. Now, even amidst these heavily overbought conditions, we cannot ignore the potentials that buyers could come in. And in fact, if we want to be buying this asset, what are the conditions we want to see on this chart that will make us feel comfortable buying the XAUUSD? Well, first of all, I would like to see price action climb back above this ascending trend line. That is the first signal I want to be looking out for. Then I want to be buying the breakout retest of the $2,189.50 level. Now, there is one thing we can do here, that is buying even before the breakout of that resistance line happens. Now, if you look at what has been happening here since this week began, you can see that we have some lower highs here. Now, if I am going to be buying early enough, I would like to see price break out of that descending trend line and then do a retest. Hold on a second. I want to adjust this. Okay, so let me zoom things in a little bit so we can see things clearly. So I would like to see price action climb back above this descending trend line, retest it, and then I will join a bullish move. Then I could actually have a buy stop order above the $2,189.50 level to continue the uptrend move. So to join an uptrend here, I think I will have to readjust this 2,182 level, sorry, 2,180 level to capture this area. So we should be having somewhere around the 2,182 area, where we shall be looking at the breakout retest to confirm a bullish opportunity, then had more position at the breakout of the $2,189.50 level. So this is my simple view on the XAUUSD for today. I hope I made myself very clear, and if you have any questions whatsoever, feel free to let me know in the comment section. So our center of focus basically right now is going to be between the $2,182 level and the $2,177 area. It's a $5 range, so depending on the direction of the breakout will give us an idea into where price is likely going today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we go ahead and round off on today's session. So I see a couple of comments here. First of all, I see you Diugan Gan. I hope I pronounced that correctly. So you're asking that for GBPUSD, tell me, is it short or long? I think I did an elaboration on that one. So let me just quickly give you a review or summary of what we talked about on the GBPUSD. So right here on the GBPUSD, right on the 1 hour time frame, we were able to identify a simple trading setup that will be guiding our trading decisions for today, and that is this range between the 1.28650 level and the 1.28450 area, which has captured a range bound trading activity and also emphasized the prevailing uncertainty in the market at this point. And whenever we have a range bound trading activity like this, we want to exercise patience and wait for market participants to make a decision. And this decision will come in the form of either a breakout of the resistant line of this range to give us an opportunity to buy. So that means above the 1.28650 area will be our buyer's territory, where we shall be looking out for more opportunities to buy at the breakout of the 1.289. Then the other scenario that we shall look out for is if price breaks down the 1.28450 level, retest the structure in an attempt to continue the downtrend, we'll welcome selling opportunities here. Now, as it is right now, I did emphasize that when the sell happens, please, we should be on standby to secure or move our stop loss accordingly to lock into profit, because the selling opportunity is a counter trend move, and anytime buyers could come in to take advantage of this market. So we added levels where we will be looking to move stop losses. So as soon as price get close to the 1.28250 area, move your stop loss, secure the current position while we exercise patience to see how the market will react to this confluence to decide if we are going to be joining the uptrend or adding more sell positions to the downside. And if it breaks down, we had more sell position. As soon as price gets around the 1.28, move your stop losses, secure the position, and wait to see how the market will react to this level. If we see double bottom structures, reversal patterns, we buy the neckline, and if price breaks down the 1.28, then we join, add more sell positions to our existing trade. So in simple terms, the structure, our center of focus today is between the 1.2865 and the 1.28450 area, where depending on the direction of the breakout will give us an idea into where price will be going. So I hope I made myself clear. Diogan, let me know in the comment section. So I see El Miosomi, good morning to you. Glad to have you around with us this morning. Trust you're doing very well out there. And I see Laco's comment here. He says that my analysis is sorting 1,890. Which asset are you talking about? Is that the gold, I guess? And what do you mean by your analysis is sorting 1,890? I'm not sure I understand what you mean by that. Please clarify by rephrasing that statement. Okay, so RIA 520 Petit X Trend, good morning to you guys, and trust you had a wonderful weekend. So I think it's on this note we have come to the end of today's session, as there are no further questions anymore. And it has been a wonderful moment with you guys. I really appreciate every single moment I had with you. So today we were able to attend to 4 financial assets on our watch list for this week, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also treated the GBPUSD, and finally the XAUUSD, popularly known as the Gold Spot. And on all of these assets, we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to strategically position ourselves for the next move. And I do hope you marked out those levels on your chart as we illustrated during the course of the session. If you had done so, well done and kudos to you. All we just need to do now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. For those of you joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. So it's on this note I want to wish us all the best of luck. I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and prepare for tomorrow's trading session, which promises to be another insightful one, as everyone will be looking forward to the CPI data tomorrow, and we do want to be on standby to capitalize on that big move. So I look forward to seeing you same time tomorrow. Until then, wishing you all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.